Hey everybody, welcome back to Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. This is part 3 of the reviewing high CAGR stocks. CAGR is CAGR, compounding annual growth rate, I believe. So we're on page 3 now. We just finished page 2, so we're now moving to page 3. And here are the stocks that we've got so far. I'm not going to go through and name them, but the list has expanded. So we have 1, 2, 3, 4, 5, 6. 24 really good stocks. I really like a handful of them. We're about less than halfway through, so let's keep going. We're gonna go ahead and open up 10 of the stocks here. All right. We'll let that do its thing. All right, $11 stock, HRT. Look at this momentum curl. Look at the RSI kind of go up. Money flow is like, is it worth $11? I'm gonna guess, yeah. I'm on the fence. It says it's undervalued right here. Undervalued currently and in the future. Let's plug in the numbers and find out if that's true. So they make 783.4 million and they make 125 million in income. That's amazing. Look at their sales, looking good. Earnings per share is looking good. Okay. So let's add cash and remove debt. Wow, they have quite a bit of cash. They have plus 162.09 for cash. Debt. Wow, they have a lot of debt. Minus 691.56. What happened? Wow, so they got into $1 billion. Is this USD? Yeah, $1 billion of debt. Total debt. $1 billion of debt. They paid down 400 million. That's great. And then they paid down 6 million. So what's going on there? I don't know. Quite a bit of selling by RJC. Wow, look what it's buying. Buying at 12 and 11. Wow, okay. Selling, so kind of got a mix of both. Let's look at revenue. So they made 600 mil in 2019, 540 2020, 730 in 2021, 806 2022. And now they're at 783, and that's a trailing 12 months. So they've got about 4.5 months to get over 806. Based on this, I'm guessing they will get to 76, 850, 880 is my guess. Gross profit is growing, like it aligns with their total revenue and their cost of the revenue. Net income is kind of whippy. So not too bad overall. And then if we take this and we're going to divide it by 67.56, that is a $5.61 stock. Currently trading at $11. That is expensive. But I'm not including the market cap. The market cap would make a difference in this case. So, that's fine. So this is HRT. Institutions own 99%. Old data shows they own 88. So institutions have been buying this. It dipped as low as $7 and it dipped as low as $8.60. It's just kind of been getting bought up. So do I like this one? I do because it's kind of overvalued, but Earnings this year is crazy. Earnings per share next year, 25%. Still growing. So this one's decently priced. I'm going to have to pass on it just because my calculation came up with 5, but that's not accounting for market cap, which is almost at $1 billion, which would have added $10 onto the share price. So it would have been out $15. So overall, it is undervalued. It could have legs. I just don't know if it's the right time for this. So we're going to pass on higher rate. IART, kind of, we can see where it's going. A little downward action. So right here, we can see it's going to continue downward. Money flow is going up. So the dip is getting bought, it looks like. Wow, if it comes down and touches the 200 SMA, that'd be the first time in over 10 years. So that's going to be a good area. 34.91. Yeah, I mean, okay, 1.56 billion was the trailing. They're up already. So they're going to beat it. They're beating that now. You're paying a little more. 5, 6, 7. Net income is going to be no. Wow, 17. This actually looks like a stock that will be consistent going forward. I want to make an alert on here. I know there's add a note. Ooh, that's cool. You can add notes here. That's great. Alerts. I don't want to do alerts on this. It's going to go down to the 200 SMA, which is around $35. So I'm just going to put a note for IART. Watch for 200 SMA on monthly chart. All right, we're going to go ahead and move on from that. IIIV. Wow, it's basically been trading sideways for 4 years. Their sales and their earnings kind of going the wrong way. Do they have over 317 million in sales? Oh, they do. They do. They're doing good. They're doing good. They're back to 345 mil. The most they ever made was 376 mil. Wow, but look at this. So their brand is sticking because they used to pay 287 million to make 376 million. Horrible margins versus now they're paying 79 million to make 345 million. That's actually fantastic. This is fantastic. Yeah, the CEO agrees with me. He paid $21 a share. It's 24 right now. Okay, so net income is negative, which is not good, but it could become positive. What happened here? Wow, gross profit, selling, operating expense went up by 100 million. They are inching towards profitability though. So cash is pretty 3 mils, not a lot. Total assets 770, total liabilities 550. That's pretty sharp. That's close. Total debt 287 million, so they're taking in more debt. Let's go and do the calcs on this because it looks like it's okay to turn around. Yeah. Wow, a lot of money in the market cap for a company that makes 345 million. 5.7. It loses 7.4. Balance sheet, they have 3.49 million in cash. Not that impressive. Total debt minus 287.54 million. Divided by 22.76. This is a $2 stock trading at 24 bucks. Wow. The market cap is keeping this alive. The market cap literally only puts us at like 10 bucks. So I don't know what institutions see in it. They own quite a bit of it. Institutions own quite a bit of this stock. It's ready to jump. It's really ready to jump. Look at this, kind of curling about here. RSI is kind of curling up as well. Man, it's just so expensive. Like, I don't know. I don't know if I could pay those prices. Yeah, we're gonna wait. I want to see it, but I want to wait. So, oh, excuse me. Okay. KMT. Kennametal. Okay. Oof, their sales are pretty bad. What happened? They're trying to get back to 2018, 2019 levels. Man, they're trying. That would put them at like 39 bucks. Let's see if they've made improvements. I mean, they're down about 300 mil. Net income is not as good as it used to be. Why is it like 100? Well, it's better. Net income is like quadruple what it used to be. Well, it used to be 49 million net income, and now it's 123. They're paying about the same to get the same amount of profits. Research is higher. Unusual expenses is lower. That's good. Operating expense is cheaper now. That's good. Operating income higher. That's good. Interest about the same. Other net interest quite a bit less. Net income before taxes more than double. Net income, yeah. So based on this, next year we would want them to be at 2.3 billion. So they have to have good guidance for next year. They have 14%. I think they can do it. Wow. The stock is holding the line at the 365-day SMA. Okay, I think they can do it, honestly. So this is something you'd have to be in for a year, year to two. That's because they're making the same amount of revenue as 2017, and the big turnover is going to be for the next year for 2.3 billion. And based off their sales, I mean, they made 200, wow, not even 16, 170 million from last 2021 to 2022. Then 2022, they made 2,001. Now they're at 205. That's not considerable. That's not even hundreds of millions of dollars. It's only like 45 million more. There's only 45. There's only 4.5 months left. So I don't think they're going to get there this year. I think I would want to check this back in September or in September. Yeah. Okay. It could be a really good one, but I just want to wait. MATW. Wow, look at this breakout. Did I miss the boat here? Maybe not. Maybe not. 1.76. It's at 1.8 now, so that is considerable at the moment. Negative net income, not that great. It's not profitable. Gross profit, is great, but I mean, their net income is not good. Balance sheet, cash on hand is good. Total assets, 1.8 billion. Total liabilities, 1.3 billion. Total debt, wow, 798. They were paying it down and then they brought it back up. No buying, but there's no selling. I mean, it's gone over 100% in the last 7 months. So October, I mean, not 7 months, quite a bit more, but it is really, it's getting hot. So could it get hotter? I think it could, but I mean, it's not quite the stair step. It was down, now it's up. So they made, let's look at 2020, 21. So 2020 to 2021, they did 100, quite a bit more, almost 200 million. 2021 to 2022, they did not even 100 million. 2022 to 2023, they might do 100 million, but it seems like they're shrinking. It seems like the revenue is kind of shrinking. $718. I mean, if you have years in this, ah, yeah, it's good. It's just I feel like we'd be chasing. I think it probably is going to keep moving. I just don't like how the sales are like getting a little bit extended. It's already at 1.8 billion, so I mean they've done 35 million extra, but they have 4.5 months to get 70 million. 700, no, 70 million, yeah. Oh, this one just doesn't seem very, it seems like there's a lot of friction here, you know? And the earnings per share, I mean, it's like negative, negative. Oh, it's positive. Oh, super negative. We'll wait this one out. It's really hot right now. It's probably momentum's on its side, but fundamentally, I can't get behind it, unfortunately. Milken. Miller Knoll. All right, this one actually looks pretty decent. Wow. 2021 to 2022. The stock actually is down. Ooh, okay. What's going on? Momentum looks like it's ready to shift. Money flow is kind of going up. RSI bounced off the bottom. So I think we have a bottom down here. Let's run these numbers. I don't like the CPS, but let's see. 4 billion in sales. 409. 4 billion in sales, is that right? Yes. Plus 42,100,000. Yep. Plus the market cap of 1,320 million. Yep. Okay. Oh, nice buying. Okay. CEO, how much did he buy? $1 million worth. Great. That's good. All right. So they have 200 plus 223,500,000 debt. Ooh, $1 billion minus 1,398,500,000. 1 billion. And that debt is massive. Total liabilities 2.8 billion. Total assets 4.2 billion. Good little buffer between those two. Cash is okay. They've had more cash. They've had less cash. Assets are historically at a good point. Next year, I think if they continue revenues, it'll be good. Let's check revenues out. Revenue, they used to do 2.2, 2.3, 2.5, 2.4, 2.4, 3.9 bill, 4 bill. And the trailing 12 months is every middle of the year. So looks pretty flat year over year, maybe. I don't know. The CEO bought, or a direct CEO bought $1 million worth at $16. Director bought $1 million worth at $16. All right. Net income's fine. Are they turning the ship around? Yeah, kinda. I mean, revenue just a monster. So we have our numbers. Then we're going to divide this by 75 million, 9,000. $56 stock trading at 17. It's below the 365 SMA. That's amazing. Wow. Oh yeah, this is awesome. I mean, it's not awesome if you own it, but I mean, it's awesome if you are looking to buy. It's a rounded bottom, I tell you what. Wow, look at this. This has been falling since May of 2021, so 3 years. No, 2 years, I'm sorry. Wow. Okay, and is this the bottom? Let's find out. MLKN. Institutions own 85.7 million shares. There's 75 million shares, so they own over 100% of the shares. That's all I need to know. Yeah. Oh yeah. Yeah. I think this is awesome. We're gonna add it to the list. MLKN. Current 17. Fair was what? 25? 56. Just yeah, massive dip historically. Yeah. Wow. Holy cow. This is like one of those generational dips. Oh, I typed in the wrong. I typed in MLHR. I need MLKN. Why does it go to MLHR? Herman Miller? This is Miller Knoll. Did it used to be Herman Miller? Oh, okay, it used to be Herman Miller. Okay. Okay. Good. I thought I was like messing up. Okay. Yeah, so they own quite a bit. Looking over here. So this is a good one long term. Alliance Bernstein decreased, Vanguard increased, BlackRock kept the same. Did they add? No, they doesn't say. Vanguard showing an increase here. Vanguard decrease for their world stock index. So, yeah, I like this one. This is a good one. Wow, look how low the MACD divergence is down here. Let's see if I can bring it back. I can't actually. The lowest it got like this before was 2009. We know what happened then. The low was $9, $7.91, and it went to a high of $50. So, yeah, very, very interesting. Let's get this back to normal. All right. And just drawing quick little do on here. I can go right there. So we'll probably see it come up to 19. We want to see if it'll hold 19. You never know. We'll see. I think it's undervalued here. Momentum is going the right way. So great stock. In my opinion, do your own research. Don't copy me. Whoa, this thing has taken off. Software. Holy cow, money. Everything's going towards us right now. Oh my gosh. Are they over 288? They're at 292 right now. Last year they went from, or 2021 to 2022, they went from 267, 288, so about 20 mil. Right now they're only at like 6 mil. No. 4 mil. They have 4 months left. It's kind of chippy. Not really. Not a lot to go off of here. Total assets 1 bill. Liabilities 480 million. Not bad. A lot of people just selling. It's mixed bag. Mixed bag. I mean, they're not profitable. They have high gross margins. It's already ran almost 100%. It's probably going to keep running, but I feel like I would chase, so there's so many other good ones that are discounted, so I gotta pass on this one, unfortunately. I feel bad. NOG, wow. Tripled 2021. Did the stock price triple in 21? Yeah, it did actually. Okay. Fair. Oh my gosh. What the heck? We're gonna do this one together. So we have sales income and market cap in billions, but we have shares over here in millions. So you know the drill. Apologize in advance. They do 2,190,000,000 in sales income. They do 1,290,000,000. Great. Market cap is 3,320,000,000. Cool. Okay. And wow. Okay. Ooh, I can't wait to get to that part. All right. Total cash. Wow, such little cash. Oops. Cash. So plus 2,530,000. Okay. Debt. Give me some billions in debt. Minus 1,525,410,000. Whoops. 410,000. Yes. All right. Cash is low historically, not that great. Total assets 2.8 billion, total liabilities 2.1 billion. Really, really close for comfort there if you ask me. Total debt is 1.5 billion. That's the highest ever been. Total assets are growing. This is the most assets they've ever had. Total liabilities, also most liabilities they ever had. Lots of selling in the 36s, 38s. This is 34. Let's pull our thing up here. So divided by 66,500,000, 400 should be 450,000. $79 stock price trading at 34. NOG, are institutions buying NOG? They own 112%, and wow, that is 30% above where it was before. Look at this. It's growing. I mean, there was a fall off in 2021. What was that about? Oh, that's when the big spike happened. Okay. 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 Oh my gosh. Jeez. Okay. That's insane. So, let's go back down here. Revenue went from 100 mil, 144 mil, 209 mil, 600 mil, 472 mil, 552 mil, 492 mil, 1.5 billion, 2.18 billion. I don't even think they're counting for the 2.18 billion. They're not. That will be a sharp increase. And we still have 4.5 months left. Okay, before I get ahead of myself. Oh my God. Okay, so they've made 500, 600 million. And they still have 4.5 months. Oh my God. That's obscene. This is obscene. This is amazing. So this 1.7 is now going to go to 2.3 or 4. 2.3 or 4 is my guess, or 5. Which is $1 billion. $1 billion a quarter. That's an extra. This is insane. This is absolutely insane. Yeah. Yeah, this is amazing. So, wow. Okay, we're going to add this one for show. NOG. Current 34, fair 79, 78. Major sales for 2023. Must think about buying. Wow. Okay. I'll do a summary. Okay. Wow. Great stock. Great. Just it looks really good. NUVA. Kind of making a rounded bottom here. It's the same price as it was back in 2015. Look at this. Kind of like a little jagged stair step. Wow, it's very overpriced based on that. So are they over 1.2 billion in sales? They're at 1.2 billion. They made 900 million from 2021 to 2022. Well, 872 million. Could we make 872 million here? I think. Maybe. I think so. What are they saying for growth? 156%. So this should go 105, 1, so 0.1, 1.2. Could it get to 1.3? Sheesh, I don't know. It's going to be close. So I'm trying to contemplate if we can get to 1.3 billion here, which would be good. That's where we should be. I mean, this barely made 100 million. This made 72 million. This is at 17 million, so it's a long way to go. Net income is very low compared to what it was last year. Gross profit's high, which is good, but they're shooting themselves in the foot on operating expenses. Balance sheet, this is the highest cash they've ever had. Good. Assets, 2.2 billion. Total liabilities, 1.3 billion. Not bad. Total debt, almost $1 billion. Their debt situation's not that hot. How are they going to kick it into high gear? Like, if you look, this could go. I mean, this could be the reversal. So let's treat it with respect. I mean, it just depends on the next few quarters. So 1.22 billion right there. They're making plus 20 million, 200,000. Plus a market cap of 2.260 billion. Yes. Okay, we're gonna add cash 248 million. 66,000. 606,000. Total debt was a lot. Total debt was minus 893,130,000. Yeah. Then we're going to divide this by 52 million, 20,000. $54 stock trading at 43. It's undervalued. Institutions probably recognize that. Oh my God, 129% ownership here? FinViz has 112. Okay, so that's 17%. Yeah. Again, all-time highs. Vanguard bought more. BlackRock bought a lot more. JP Morgan sold out. Well, it didn't sell out. They sold some. Wow, and then Vanguard sold some here. Okay, so Vanguard did buy some back in February of this year, and then they just sold some. Whatever, they probably took a loss. They took a loss. So, in terms of long-term reversal, look. Am I on the monthly? I'm on the daily. Oh, I'm on the wrong stock. Okay, here we go. In terms of long-term reversal, does it look similar to this? It kind of does. Like that was a huge run up, and now it's kind of, it did it right here, but now it's about to cross it again with some strength. So the RSI here was about 47 when it happened, and over here it was about, where's the crossover right here? About 39. So we got a little bit more strength than we do on the last time it crossed over for the major run. Gosh, this one went from, where was it? Right here. About $14 to 80. This next run, I could see this going to... I mean, I could drag it up. I mean, great. If it goes and touches, so it touched in 2008, 2017, so about 9 years at like right, almost $100. So that's a 50%. No, 100%-ish. So, NUVA, I do like this one. NUVA, current 43, fair was 60, 55, 54. At bottom of the long-term channel, RSI, money flow, and Momo, MACD, plus. Okay. All right. Yeah, good stock. Very, very predictable channel, looks like. All right, next one is Northwestern Mutual. Wow, look, it's right next to the 365-day SMA. What's going on with this one? It kind of looks like it's going to go downward again. Wow, look at the sales. This is impressive. I don't know why I'm holding or whispering. What's going on? Are they over 1.04 billion right now? They are. They're at 1.15. So they made less than 100 mil from 2020 to 2021. 2021, 2022, they made 177 million. Right now they're at 112 million. I think they can do better than what they did from 2022 to 2023. Oh my gosh. They've been amazingly consistent for the past 4 years. Wow. Good for them. I bet there's a lot of institutional buying. Cash on hand, that's really good. Total assets 4.7 billion, total liabilities 3.5 billion, and this is for bank or natural gas? Natural gas, okay. Natural gas, it's the energy company. Total assets continues to grow at a rapid clip. Total liabilities, same. Total debt, really high. All right, I like this one a lot. Wow. It's really going to grow. Money flow is going down, though. RSI is kind of whimpering out, too. But, I mean, the revenue is just insane. So let's run the numbers and see if we want to buy the falling knife. Let's see if institutions are selling first. So institutions own 77%. I would think, I don't know the numbers yet. I would think they might be selling this into oblivion, or they might be loading the dip. What is this? I don't know what this is. Intel NWN. Okay, it's not working, so let's do Northwest Natural. Institutional ownership. Weird, it goes here. Okay, so we will look at total institutional shares long as 31.9 million. Close. That's really close. 31.9 divided by 35.62. 89%. Up 12%. Okay. So they're buying the dip. I mean, this thing used to be $7 and it is just, it's been a slow grind. Wow, that's actually really long. Took 30 years to get to a 10 bagger. So it's probably going to go down really slow. How slow, you say? I mean, they're trading at the same price as they were in 2007. And they have record revenues. Gross margin is beautiful. This is one you kind of want to buy the dip on. Like, this is crazy. Why is nobody like watching this? I don't really see any patterns that I could draw to off the top of my head. The stock is almost down 50%, which not bad. Wow. I mean, I like this. I mean, it's got like it's just not favorable for some reason. I don't know why. RSI is getting stronger. I feel like this is worth a swing at least to 46 and then see what happens, honestly. So we're gonna NWN current 43, fair was 89. 89. I mean, Rev is amazing. Historical. Jeez. In a wedge on weekly, I mean, there's little to no risk here other than like the technical. Like if they keep bringing this, I don't even know who's bringing it down. I mean, it used to have a record. Let's look at this. Why is it TCF? What's going on here? TCF, why do they call it TCF? I did Northwestern Natural. I don't know if it was a different company or what. Institutional ownership. Yeah, it does the same thing. Okay, so kind of annoying, but yeah, this is pretty good in my opinion. Like it's 2016 to 2023, it's doubled essentially. And 2016 right here, it's actually gone down. So I mean, it went from 46 to 76, but This is historically a good price in my opinion. So we'll see what happens. I'm gonna catalog it. So let's move on to the next 10 stocks. All right, we're getting the next 10 stocks. All right, here we go. NXGN, next gen. Oh, ooh, it's been trading sideways for 10 years. Oh, look at that stair step. This is exactly what we look for, the stair step. 10 years of boring hula la, whatever you want to call it. Wow. All right, we're going to crunch numbers here because I'm excited. The stair step is amazing. They have 653 million sales in 2023 so far. Are they counting that? They are. Ah, okay. So 57. No, they're moving at a good clip. They're moving at a good clip. Okay, let's do the numbers. 653,200,000. They're losing $2 million. Whoops, $2.7 million. But they have plus 1,110,000 in market cap. Good for them. Let's add cash and remove debt. So plus 98,720,000. Yep. And losing total debt of 266,840. So 266,840,000. And while we're down here, let's do a peek. This is the highest, second highest cash they've ever had. Good for them. Total assets 896 million. Total liabilities 495 million. Total assets continue to grow at a natural clip. Total liabilities, wow, kind of all over the place, but this is the highest they've ever been. Total debt, wow, they were debt free up until this year. So they must have grown. They did something, I think. Let's look at revenues. So 500. They've been in the 500 mils since 2017. They got into 653 mils, so that's a pretty big jump, if you ask me. And then the selling looks like it's related to options, except for this one. David Metcalf, what are you doing? What are you doing selling some of your stock? Just kidding. Net income, it's kind of having a tough time, but cost of revenue, are the margins better? No, they're a little bit worse. So, I mean, they're still high, but they're paying 342 million to make 653 million versus paying 300 million to make 586 million. So, I mean, it's helping them. So, not bad. We've got our calcs here, so we're gonna divide it by 43,490,000. $36 stock price. It's at 17. It could get some serious legs behind it here, so I'm thinking I like it. Let's look at NXGN. Institutions own 92%. Old data is 78, so that's a 14% jump, 14-point jump. So that's good if you ask me. Wow, the 300 SMA is like just acting as support. This is being really tame. If you look, I mean, it seems like it's a good move up to 20 bucks now. Wow. I'm just kind of shocked. Wow, it's been at this level since 2006. Wow, look at this huge, oh my God, back to 1991. Huge. I think it's ready for a a move, you know what I mean? Wow, look at this huge drop it had to $5 right here. So if you got time, this might be a good one. I think this could be a good reversal one in my opinion. So we'll do it. It's not a bad one for sure. NXGN current 17, fair 36. Revs are heating up. I mean, what about everything else? Momentum's heating up. Everything's heating up. Okay. Revs heating up, RSI, money flow index, and MACD plus. Okay. All right, good one. This is, all-time low area, Fiddlebro Animal Health Corp. Wow, okay. Again, kind of a stair-step thing going on. Very good. Okay. Let's run the numbers on this. 978 million.1 in sales plus 28.6 million in income. Market cap is under 100 billion, so we're not going to do it. Cash is 74, which historically is good. Plus 74.25. Minus the debt of 432, which is almost half. All right, and 648 divided by 20.23. $32 stock trading at $14. I can get behind that. Are we over 1 billion in sales right now? Please. Revenues 978. So 2020 to 2021 was 33 million. 2021 to 2022 was 109 million. 2022 to 2023 is currently 35 million. It could probably get to 50 some million. So gross profits growing at a natural clip with it. Net income is still, it's kind of all over the place, but it's good. It's decent. Overall, really good. Total assets 931, total liabilities 669, not that great. Total debts 432, which is the highest it's ever been. I mean, it's going to continue to grow, I think. So I'm going to guess institutions own over 100%. Why wouldn't they? 58%. Okay, they own 23.5 million shares. There's 20 million shares available. Okay, so they do own over 100%. So, what's the pattern here? It's a wedge, but it's definitely a wedge. It's kind of a head and shoulders. So it needs to break the neckline. So we have left shoulder, head, right shoulder, and the neckline is like, oh, it did break the neckline. So the neckline's right here. So left shoulder, head, right shoulder, and then the neckline's right here. So this is good. Like right there. So broke the neckline, which is what we want. And then high. I should zoom in on this part. Did I get it? Yep, I got it. I got it. Oh, look exactly where it's at. What's the strength? Oh, the strength going into this move is good. So, wow, it closed right under the line. Look at that. It's going to be a good week next week for this stock. Wow. Wow, 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 wow. I mean, could it fall lower? Yeah, but at that point, I mean, it's at its all-time low. It's better than 2018, better than 2015. So this is one I think, ooh, 14 bucks. I think I could buy this one soon. So PAHC, current 14, fair 32. Long-term reversal ready. What's the Momo? I mean, Momo's, it's not like, it just seems kind of faint. Everything seems kind of faint, like bleh, no energy. So, so H, so bear H and S, broke neckline, ready for reversal. Okay. Yeah, this one, it's going to be a fun one to watch next week, even though I'm probably not going to make a position next week. It's going to be cool to watch it break that long-term resistance. Okay, PGTI. What's going on here? Wow, it's at all-time highs. Wow, went from $1 to 30 bucks. Okay, did we miss the boat here? Kinda. I would not feel. Oh, look at this stair step though. Are they over 1.49 billion right now? They're at 1.5, so that's a $300 million move there. We're not going to get that this year. So we should see some slowing. So what happened is 2021. Why did it capture it twice? Anyway, 2021 to 2022, it grew 500, almost 600 million. 2022 to 2023, it's only grown 50 million. So it should, I think it's going to slow down quite a bit. We're going to pass on that. Rocky Mountain, this one's been on my radar for a while. I think we'll find out why. Chocolatier. So, oh, this is Rocky Brands. I thought this was the Rocky Road Chocolate Mountain one. Rocky Mountain Chocolate. So this one has not been on my radar. Just taking that back. Okay. So 615 million 2022. Ooh, they're behind. Why are they so far behind? They're at 558 million. We need another 50, 60, 70 million. Oh my gosh. I mean, quarterly, they could do it. They could do it. But are they going to do it? I don't know. Do I trust them that much? I don't know. Oh, why is it so far behind? I think it's ready for a reversal. It's did a double bottom here. So let's run the numbers and stop being a little baby. Okay. Everything's in millions. Great. So 558 million, 509 plus 12.7 million. Total cash is not a lot. Total debt. Wow, half that, 256.9. Oh, okay. Divided by 6.83, $46 stock trading at 22. It's got no. Let me take that back. It's got 3 quarters left. It did 110 million this year. Last year it was 167, so it's quite low. Did 131 2 years ago, 162 1 year ago. Wow, that's a 30% increase. Or I'm sorry, 30 million increase. They're kind of struggling. 2021 they did 169 million. 2022 they did 138 million that quarter. They're kind of missing, like, ebbing and flowing 30 million a quarter here. Man, so that would be like, let's just be really conservative. 110 million is the lowest they've done each quarter. So if we go back here and we go to annual, 110 and 110, so that's 220 plus the 558.9. So that's 778, which is 100, and that's quite a bit more. It kind of doubled from 2020 to 2021. Then 2022, I think if they can do 110 million in revenue, let's see, May 2nd. There's a dividend. Ah, there's the dividend. Damn. Why can't they use that cash to better the company? Okay. Do I think they're gonna do 110? I think they will do 110, honestly. Okay, I like it. And what's RCKY? Institutions on 89%, so 12 basis point difference. I mean, historically, this is like pretty cheap. 2020 levels. Yeah, it's like tripled since 2020. And the stock, I mean, it went up, but now back here it's relatively low. So yeah, we're gonna do this. We're gonna do this. Fair value was 32. We need 110 mil for next 2 quarters. That would make this, that would save the company and probably get them back to, I mean, that would get them back solid to, like, I think 30 plus. If they can finish this year with 700, let me do the math here. So right now it's trading at a 22 divided by 32. 68% discount, is that right? Yeah. Okay, let's do it. We'll do this 68% discount. Where's my pen? Okay, we'll do the same numbers at a 68% discount. So if they do 770 million plus 12.7 million, they're gonna, let's say they have plus the 5. Oh crap, I did the wrong. No, I didn't. Plus 5.72. And the total debt is gonna be, it's decreasing barely. So let's say they pay off another 14 million of debt. So minus, no, let's just keep it 256.9. Okay. And then this divided by 6.83. $77, is that much of a difference? Oh, I gotta add a 6. Yeah, so 77. $52 stock. If they could get 770, 770 million. Let's just make sure I did this right. $558.9 plus 12.7. Yep, plus that. Yep. Okay. Then I did 220 because that's the 2 quarters for that we're gonna get 110 if they do it. And then I saw what the difference was between my stock price versus actual price. It was a 68% discount. So I took the 770, which was, where did I get 770? $778. So I undercut it by 7 mil. Okay, whatever. Minus the 256. Did I minus the 256 down here? Yeah, I did. And then I divided by 6.83, and then I divided it by 6.83. Then I gave it a discount. Okay, so yeah, $52 if they can do that. So, stock could be $58, 277. All right, that looks good to me. And institutions buying. MACD, RSI are all up. So Momo, RSI, money flow, index, plus, whatever. All right, cool. Good math there. Red Rock Resort has been on a tear. It's been kind of trading at this level for a while. Let's see what's going on. Their debt right here is sticking out like a sore thumb. Are they over 1.6 billion? They're at 1.7. Okay, so go to the debt. Total debt's 2.9 billion. Total assets 3.3. Total liabilities 3.3. Just dangerous, man. Dangerous. It's crazy. Yeah, I mean, the 1.7 billion and the 5 billion and then minus all that. We can run the numbers, but let's see, 1.7 billion plus 201,800,000. Yep. Plus 5 billion, 70 million. Yep. Plus cash on hand, which doesn't look like much. 117 million, that's actually not bad. Plus 117,290,000. Minus the total debt of 2,984,780,000. All right, and then we're going to divide this by 53,140,000. $77 stock price, actually. That's a lot better than what I thought. This is ready to make a jump. Look at this. Money flow is max. RSI is zooming up. Monthly momentum is just torqued up right here. So yeah, this is gonna explode in my opinion. And then yeah, this is on its way up. So this is trading at 2021-ish levels, September 2021. Let's see September 2021 levels. September 2021, so they've doubled their cash. Let's see the income. September 2021, they did 414 in revenue. Wow, they're barely better now, but profit barely better. Net income, not better. Wow. That's crazy. So, man, that's a bummer. This is all going to be a technical move in my opinion. So, yeah, it'll be good, I think. Um, but again, I'm not a fan of they were doing compared to September 2021 to where we're at March 2023. Ugh. Um, yeah, not the best. Profit, net income was better, profits were better. Are they? Yeah, they're spending a lot of money right now on marketing, actually, too. So yeah, all a technical move, in my opinion. Long term, it's a trade. I would want to invest in it if it came back down to, gosh, I mean, this was a steal to get it at $2.43. So yeah. Anyway, I'll stop crying about it. Let's move on to the next one. We're gonna pass on it. I could buy it in my retirement. I think Red Rock and Boyd Gaming are ready to move like crazy, based on that same data I just showed you. So, Sats, Echo Star, beautiful stair stepping. Are we over 2 billion right now? 1.936. I think we'll get there. I think we'll get there. What are we? Where are we at quarterly? Oh, I think we'll get there. I think we're gonna get there. We've got 2 quarters to get 800 mil. Yeah, 800 mil. That would put us at 2.7 bill. 2.7 bill, 2023, 2 bill, 1. That's a big increase. That's a big jump. Wow, comparing where we are on the map or on the chart, that's reversal city if you ask me. This is all good. Let's crunch the nums. EPS stair stepping like crazy. This is a good one. I can tell this is going to be a good one. So they do 1.94 billion in sales, good for them, plus 114,700,000 in income, plus 1,610,000,000. Yep. This is gonna be good. Wow, that's a lot of cash. Plus 704,540,000. They must have big debt. Total debt, not too bad. Minus 1,496,780. Yes, 1,000. Boom. Okay. And while we're down here, let's just look. Cash is relatively kind of low, actually. They've had a lot more cash. This is in USD. Total assets is at a not at all-time high, but it's getting better. Total liabilities is not at all-time high. It's kind of getting lower. That's good. Total debt is almost the second lowest that it's ever been. That's really good. That's really good. Wow, I'm excited for the revenue part. 1.8 bill in 2016, 1.8 bill in 2017, 1.7 bill in 2018, 1.8 bill in 2019, 1.8 bill in 2020, 1.9 bill in 2021, 1.9 bill in 2022, almost 2 billion. 2023, they're going to hit 2 billion. Gross profit is gonna do better. I'm sorry, yeah. Cost of revenue, yeah. Gross profit will do better. Operating expenses getting lower, kind of. Net income, kind of wishy-washy, but I think they're on the right page, honestly. Wow. Okay, total assets is 6.1 bill. Total liability is 2.6 bill. Wow, that's at least a 2 to 1, more than 2.5 ratio. So that's a lot of money. This is really good. Are institutions gobbling this? SATS? It's kind of going down, EchoStar. They own 36 million shares, so it's over 100%. Last report at 93%, so that's good. Institutions, are they doing anything? Or insiders are not doing anything? I mean, this was $8 before. I mean, it's going to go to 2 billion, 2.7 billion, likely. Yeah. So I like this one. If they do 2 billion, I mean, what? Did I even finish my numbers? I don't think I did. Divided by 33,650,000. $85 stock trading at $18. Did I not finish my calculation? It's so funny. I did 194 billion plus income plus market cap plus cash minus debt. Okay, and then divided. So $85 stock trading at $18 and it's got legs. I think we could see this one potentially do a long-term reversal. It's just, yeah. The money flow is kind of it's the money flow. Money flow is kind of pointing up, but not crazily. RSI is kind of pointing up. I feel like this is a good long-term dollar cost average one you can get into, in my opinion. So sats, we're gonna do sats. Current is 18. Fair is 85. We need 400 million. Next 2 quarters. I mean, everything looks good for a long-term DCA. So what I would do here as part of my strategy, I would start investing in this in my long-term brokerage account, because by the time a year rolls around, I could then sell, hopefully for a profit, at a long-term capital gain of a lower tax bracket. So that would be a good strategy here. However, we've seen the momentum shift here. I mean, the low was 20, went to 40, that's 100%. Low here was 20, went to 30, 50%. And now it's just kind of bloop. So we'll see what happens. Kind of looks like the reversal's already starting. So again, we're just going to watch it closely. And they need 400 million each quarter minimum. SBOW. Whoa. Is this a long-term cut then handle? Potentially. Wow, so undervalued. Oh my gosh. Oh my gosh, look at this. Wow. All right, let's run the numbers here, you guys. 763 mil 0.7, okay, plus 499.2 mil. Not a $1 billion market cap. Cash they have not a lot, so plus 0.79. Total debt is minus 688.53. Divided by 21.6. $26 stock trading at $29. That's a little rich for me. I I mean, it's just amazing. Like, they've doubled. Like, if we look at the quarterly, so this year they had 139 million. Last year they had 129. So that's only a 10 million difference, honestly. I think we're going to see a slowdown here. Look at all this selling too, by the way. I guys can't see the rest of my screen. Okay. So we're going to pass on this just because I think we're going to see a cool down. Volume is kind of tapering off down here. So let's pass on this one. SCS. All right. Man, their sales in the billions is good, but not really keeping up. They used to be at this same level in 2020, and they're just not. Let's see. So right here, gross margins are about the same. So their brand is not that sticky, is what I'm seeing. Net income was 126 in 2019. Here it's 35. Not that great. They've barely became efficient at operating expenses. Gross profit is down, which is fine because it's, they made 3.2 billion here, and here was 3.4 billion, so an extra 200 million, but still. We're gonna pass on this one, you guys. Ooh, this one looks hot. Money flow's going up, RSI is up. All right. Technology, semiconductor, beautiful staircase setup. Are they over 1.8 billion right now? 2023? They're not. How much are they doing each quarter? They're doing 383. The lowest amount they've brought in was in this year, 383. So if they bring in another 383 million, I mean, they would surpass, let's say 300 million. So they'll bring in 300 million for the next quarter and 300 million for the quarter after that. That's 600 million. So that would be 2.3 billion. So that would be an increase from 2021, 2022, 2023. So overall, it would be a sequential increase. Gross profit, 430. Gross profit is growing with it. Yeah. Kind of on the fence on this one. Why am I on the fence? I mean, it's going to do nice. It's going to do nicely. Semiconductors. Probably the margins, though. What's the margins? 25%? Barely eking out. No, will they get better? Gross margin for the last quarter. Oh my gosh. 383 minus 284 divided by 383. 25%. That's the worst one I think we've seen. And then let's look at February, that quarter. So 429.17 minus 3. Whoops. 25% margin there as well. Not bad, but come on. Come on. To be fair, that they spent quite a bit less. They spent, actually, that means they're kind of sticky. So they spent 16 plus, they spent $34 million less. Okay. Good for them. They're getting more efficient at operating expenses. Okay. So I think we can expect at least 600 million from this company. So let's look at let's do this now. So 172 billion. Yep. Losing 26,700,000. Yep. Plus the 1,390,000,000. Yep. All right, let's add cash, remove debt. Ooh, nice. They have 400 mil cash, which is the highest they've ever had. Nice. Plus 401 million, 220. Yep. Debt's got to be pretty big. Total debt's not that bad, 814 million. All right. Divided by 46 million, $57 stock trading at $27. Not bad. If they do get their 1.72 up to 600 mil, so adding quarterly. So 2.3 billion. We'll say 2.2 billion. So let's just redo some math here really quick. So this is trading at over 100%. So let's cut this in half divided by 2. So basically, the stock's trading at half of what it could be. Are institutions buying this? Yes. I would think they are. 124%. Yeah, that's a 21% increase. So yes, they are buying. Okay, so this is smashing. So let's do this. If they do 2.2 billion in sales, so 2,200,000, correct. Losing 26,700,000. Yep. Plus 1,390,000,000. Yep. All right. And cash, let's say they don't grow their cash. Oh, I did this on that's fine. So plus 363 million, 6. And we're going to move total debt, so minus 603. Okay, and then divided by. So this could be a $35 stock trading the way it is, discounted. So I see upside, honestly. But it's already up over 100% in the last 8 months. Institutions are buying like crazy, though. What I could see happening, let's see. I could see resistance coming up to 41-ish. I mean, I like the momentum. I like the strength. I like the money flow. So the last time the money flow was like this was right here before it ran 100%. So almost 200%. Yeah. Okay. So we'll watch it. Could be heading back down, honestly, to 14. So I'll just keep it on watch. SGH. Keep on watch. Big inst buy. Great growth. Okay, good one, good one. Sugary. Oh, surgery. Wow, this thing's just gone up over 100% pretty quick. Wow. $3 to $68. Oh my gosh. Now it's again over 100%. Stair stepping, we're at 2.54 billion. Are we over 2.5 billion right now? We're at 2.6 billion. All right. This one's gonna do great. This one's gonna do great. It's at 44 bucks. Let's do the math on this one just so I can feel better about it. Okay, 2,610,000,000 loses 91,700,000. Wow, big market cap plus 5,630,000,000. Wow, okay. Yeah. Plus 282,900,000. Okay. Big debt, big debt. Total debt 2 billion. Okay. 2,621,800,000. Yep. Divided by 66,450,000. $87 share price, so it's about 100%. It's trading at a 50% discount right now, pretty much. Trading at a 50% discount. So if they can do that's pretty unreliable. 155 and 155, so that's 310 million for the rest of the year. That's being super conservative. 310 for the rest of the year would put them at 310 million. So that would put them at 2.9 billion. So let's try that and then divide it by 2. So 2,091,000,000 minus 91,700,000 plus 5,630,000,000. Yep. Okay, then we're gonna plus 282,900,000 minus that debt of 2 billion. Yep, minus 2,621,000,000. All right. How did that should be? Okay, we're gonna do that again because that didn't seem right. So 2.91 billion, because we're adding in the sales that could be. So this is correct, minus 91,700,000. Correct. Okay, and now we're gonna add 5,630,000,000. Yep. And we're gonna add in here, so plus 282,900,000. Yep. Minus 2,621,800,000. There we go. Okay. And we're going to do this divided by 66,450,000 divided by 2. So this will be a $45 stock. I mean, even if they do hit their targets, it's still it's priced around this. So, yeah, we're gonna, what if they hit their high targets? High target would be, gosh, 200, so 400 mil. That'd only be adding 45 mil extra, so about an extra, yeah, nothing much. So as attractive as this one looks, I'm gonna have to pass on it. All right, we just finished page 3. If you guys made it this far, please consider subscribing to the channel, hit the like button, and I'll see you on the next one. Take care. Bye.